boys. Enough of that. Time for business. A little bit late today. I was stuck at work. Wasn't too busy. The market was pretty quiet. Just had some a little bit of work to do. But in terms of where we are as a market, things are pretty quiet for a reason. Now, it's sort of the calm before the storm. Next week's going to be huge. In particular, it's going to be huge for dollar yen. Now, dollar yen's been consolidating after testing 100 a few times. And really, next week's going to be make or break for this pair. We have this combination on Wednesday of the BOJ Asian afternoon and then the Fed around 14 hours later. All right, and that's the two biggest movers for this particular pair happening in one day. Now, if by chance we get the BOJ surprising the market with a rate cut and some sort of steepening of their bond yield via targeted purchases and ongoing commitment to be buying QE, including looking at assets outside the country, which is a form of currency intervention, then you might see the dollar yen react to the top side. The bar's set pretty high. So there is room for disappointment. And standing pat or not cutting rates or just talking about cutting rates and not announcing concrete measures is probably going to lead to disappointment. In effect to the Fed though, yeah, it's a pretty much done case that the Fed's not raising rates. Okay, everyone knows that. But I don't think it's a done case that they're not going to prep the market for a December rate hike. In fact, I believe they're going to buy as much optionality as possible, while at the same time trying to come across as dovish. Now, this is a difficult task to achieve, and she may misstep and come across as too hawkish. Yeah. Now, if that happens, then the bond market rally that sell-off that we've seen, the yield rally, may come back into focus, and that could counter some of the dollar yen selling from a BOJ disappointment. All right, so it's by no means a done deal that we're breaking 100 on just BOJ disappointment. We have to see what the Fed comes out with and whether that produces some US dollar strength. Even if it produces some stock market weakness with the bond market selling off, you might see just the yield surge too much for the safe haven demand for the dollar yen. If the stocks are selling off, usually dollar yen falls, and we end up having a squeeze higher like we did earlier last week, and even though stocks were falling. Now, I'm pretty sanguine about that. I don't think that the BOJ is going to break 100 very easily. The dollar yen is going to break 100 very easily. And I'm a bit more inclined to be bullish. But then again, I've been bullish on dollar yen for years. So I definitely have a bias on this particular pair, looking to buy the dips rather than looking to sell the rallies. Now, I'm fully aware that BOJ is probably going to disappoint. So I'm not really too keen on this particular pair at the moment. Now, if the BOJ disappoints and starts some dollar weakness, you might get some run up here in some of the pairs. All right. So the way I'm actually thinking of playing the market into Wednesday is to be long, especially if stock markets settle down, and they're settling down a fair bit now. Is to be long the Aussie just for Wednesday before the Fed, because I think the Fed might misstep here and become a little bit hawkish. But dollar yen led dollar selling could be this catalyst to get the Aussie back up towards 76 early next week, especially if stocks are relatively strong. By no means am I keen on this trade. It's just no other pair strikes me as clean. Pound was my go-to buy against the US dollar, and the pound is struggling. The recovery trade is off track, the data is not supporting, and the BOE is not helping. So without a surprise strong piece of data to help out, then this is going to struggle. Can we get some surprise data? I mean, the data which really helped the pound rally last month was the PMI data. Now that's coming out not next week, it's coming out the week after. So you might get some rally in the pound the week after that, but just straight away we got that Fed risk, and they're going to have to be pretty dovish here to get US dollar aggressive selling, sustained aggressive selling. And if they're super dovish, then they're going to lose a little bit of credibility because they've been talking up this rate hike chance for September, and now they're like taking December off the table. I don't think they can take December off the table, right? They have to talk about December. They have to talk about coming rate hikes. And if the market takes that as hawkish, then this might not be the US dollar bear event that everyone's expecting just because they don't raise rates, right? In fact, if you're positioned for US dollar weakness after the Fed, then you might be in for a bit of a surprise. Doesn't mean we don't get a run up into the Fed of US dollar weakness, but afterwards, that's going to be a surprising. That's going to be an interesting day of trading. We are preparing trades for that event as well. Okay, so one trade in particular, which is on everyone's mind, is the Kiwi. Now the Kiwi was beginning to sell off with a risk aversion, didn't get further, didn't break any key support, still relatively an uptrend, but this pair, right, is most at risk if there is a surge in yield after the Fed, because 2 hours, 3 hours later, there's the RBNZ meeting. All right, so this is a gangbuster event for the Kiwi as well. BOJ first, so dollar yen first focus, then the Fed focus, and then RBNZ focus. There's a way which the New Zealand dollar gets shredded. Okay, now that's if the Fed comes off more hawkish than expected, even though they don't cut, so they don't hike. And then Wheeler somehow does a better job than he's done before of talking about coming rate cuts for the New Zealand dollar. Something along the lines of we're close to cutting rates. We'll, soon rate cuts should be needed soon. I mean, that's the very least they have to say. The very least they have to say, just not to cause a Kiwi rally. Got to get the market pricing in November rate cuts, and also potentially one more rate cut that would come across as dovish, and also start to warn the market about the strength of the Kiwi dollar a bit more forcefully. Okay, if they do this and they do it correctly, then you've got the chance for a 1-2 punch on this Kiwi dollar, where the Fed's pretty hawkish, gets us down, maybe even breaks or gets testing the key support 7180. If we can break the key support on the back of the RBNZ, then we do have some follow-through potential here for this particular pair. You know how the Kiwi likes to fall. And if there's also some risk aversion because the Fed's come across as hawkish and the global bond market sell-off continues as yields rise unabated, then this could turn into a really big trade, 300 pip top trade, 400 pip top trade, all the way down to 200-day moving averages under 70. I think it's around about 76.80. I don't think this is the correct moving average that people are targeting. So, that's a trade plan for next week. How will it affect the Aussie Kiwi? Well, Aussie Kiwi is getting smashed, and there needs to be a circuit breaker. So potentially this could be the circuit breaker which allows the Aussie to outperform relative to the Kiwi. And if the Aussie's falling, the Aussie's already in trouble technically. There's not too much follow-through selling to go for it, whereas the Kiwi's got a lot more follow-through selling. So it could be the circuit breaker we're looking for in the Aussie Kiwi trade. In terms of the other trade we're in the short euro pound, because of the pound weakness, this trade's not looking great either. We need some pieces of UK data to come out to help take attention away from the BOE talking down the outlook and start to give the latest. The market's got a very short-term memory. It will react and it will have a persistent effect upon the latest piece of data. So the really strong data help the pound to rally. Let's bring up the pound. Pretty aggressively, right? If we get another piece of data, then as long as we still haven't broken any back below, say, 130, then the potential for the pound to outperform is very real. Now you see, it's not by coincidence I don't have any US dollar exposure right now. It's just I don't have a clear view what I feel the Fed's going to do. But I may be shorting into the announcement and then closing before the announcement early next week. and I just got to pick which pair I'm going to be playing. That sort of buy the rumor, sell the facts type of trade idea. But yeah, in this particular trade, the euro pound trade needs some pound outperformance, or I will take as well. I'll take the ECB, like insiders from the ECB to announce or no, are discussing extending the QE package past March 2017 at the next ECB meeting. If that happens, that's the euro. That's good for about 100 pips on the euro down, at least. Also, it would help stocks rally, which would help pound rally. And the key part, which is killing the pound, there's a pair which is really killing the pound. That's the pound yen. So the pound yen has a big impact on pound dynamics, especially when it's falling. And usually, when to get a really strong pound rally, you need the pound yen to be part of it. So you need the dollar yen to be stable or in an uptrend. This is just the way it's been in the last couple of years. Yeah, it's just the facts are that when the pound's rallying, usually the pound yen's rallying. Usually there's some sort of dollar yen stable or dollar yen rally that helps this particular pair. All right, so we're not getting any of that right now, and so this is a bit of a dangerous trade. In terms of the stops for the euro pound shorts, we put it in around about 85.90 mental stops. So we're going to have to reevaluate. Aussie Kiwi, we're going to war, so we're not taking stops on that. All right, but this is not developing very nicely at all. But yeah, I mean, it is what it is. The stability in the stocks is allowing the Aussie jump back above 75. Noticeable in the market, about the only thing which moved considerably last night and has held onto that so far today. Pound's still a little bit weak. Euro's literally doing nothing. Untradable. Stocks settled down after those big falls last Friday. And let me bring the Aussie up. I mean, literally that we're getting excited by a market moving 30, 40 points means it must be Friday, and it's there's not much going on. Literally, is not much going on. There's a bit of US data later tonight, but that's not key in any way. Consumer sentiment, nah. I mean, it'll help. CPI, it's monthly CPI, so it's not huge impact stuff. If it's ticking higher, that'll definitely help, but it's hasn't been ticking high for a while. So we shouldn't expect too much from tonight's action. Only thing which could happen is a second leg of the stock market sell-off, and if that did happen, it would have to break 1790 to really get the FX markets to move with it, and that would be Aussie negative, and pound negative, and pound yen negative. I mean, pound yen is tilting on the edge, right? Bring up pound yen. Tilting on the edge. It's got a few hundred pips here to pull back if the market rolls over again, so it's looking pretty weak. And that's just generally the case when dollar yen's under pressure and the pound's starting to move lower. Yeah, look, I noticed the head and shoulders on the euro pound as well. I think we're hoping for that to be the case, right? Rather than it is the case. I mean, look, yeah, it's potentially forming and it looks okay. But let's see how this little attempt to rally goes. This could be negating all this selling pressure up here very quickly if we get a little bit higher. So it'll be good to see this back below 85 today. But I'm not holding my breath for that particular pair. This is developing negatively. I mean, there's nothing wrong with even closing out right now. I'm just going to let it run a little bit longer. See how it performs. Stocks down on CPI beat. Look, in theory, a strong CPI number tonight will lead to further bond market sell-off. I don't know if the market's in the mood for that, so close to the Fed. You'd expect, if there is a stock market sell-off in the next few days, a second leg, then that will just dub up the Fed even more, and so that would help us front run a long Aussie trade into that announcement from dips, as long as it didn't break 74.50. So that's a potential trade idea if the market goes that way. I don't see the stocks going ultra negative again. The stability in the bond market is helping the rebound. Perhaps you can play the Kiwi via options into that event. Let me just check the pricing on the options. The broker I work for is one of the only brokers that does retail options. I'm just going to check it myself right now. Haven't checked the pricing on an option. Shouldn't be too expensive because volatility is really low, and volatility is most expensive. The most important thing for pricing of the option. So you can check the pricing, tailor any option you want type of scenario. We're looking at the Kiwi dollar and we're looking at a put. And we want to hold it through probably to Friday, right? Get a little bit of follow through in the trade. About 70 pips. About 70 pips. So the break even there will put you around about 72.30. Not too bad. Not too bad. A little higher than I want to pay. I mean, you could just put a short in with a 70 pip stop as well. Aussie's a lot cheaper. Let's look at the Aussie Kiwi though. Aussie Kiwi might be relatively cheap too. Alright, he wants 70 pips too. You can buy a March 14th, 2017 option here on the Kiwi. That break even will be around about 10. Sorry, I've put in a put. A call option is what you're looking for there, guys. So 105.20 in March next year. That's the break even for this particular trade. You can't get stopped out on the downside because you're not buying a day trade here. You're buying the right to buy a trade. So it's like you only exercise it if you want to type of situation. So there is no trade to be stopped out in reality, right? It's just you've got the right to buy at 102.70 for the next 6 months. If the market reverses and reverses sharply, we're looking 112 to 110 to 115. So the risk reward is pretty good, 2 to 1 up to 4 to 1 there on this particular trade. It's not a bad trade idea. If it gets up to 115, which is easily achievable, it may look ridiculous right now, but 6 months is a hell of a long time in the market. It doesn't take 6 months to travel that far, especially if it feels like the bottom's in, a significant bottom, and if the difference between the RBNZ and the RBA rates go from where they currently are, RBA at 1.5 and New Zealand at 2.0, to RBA at 1.5, RBNZ at 1.5. That equalization of the interest rates is a big deal in long-term FX forecasting and pricing. And so this is not too bad a little trade here. The other trade that is interesting is to sell a put. Okay, now in this scenario, alright, as long as the market's above 102.70, you get the full margin, okay, and your break even is at parity, or 1.0060. So as long as it's above parity, you're making money, pretty much, hypothetically, right? This has got a little bit more downside in terms of if it breaks and just keeps on going, you can lose up to 400, 2 to 1. So it's sort of an inverse situation here, but it's about making money from the market being about the market finding a low and ending above parity. I mean, even breaking parity is a big call. So for me, this is sort of very low risk type of trade. This is not the type of trade where I expect to lose much money. It just takes a long time to eventuate. So I like this trade idea, and this is the sort of trade idea I'll be doing myself. If we're closer to parity, I'll be selling some puts. All right, I'll be selling some puts. I might buy some calls. I'm definitely going to be in the spot market, but when you're in the spot market, it's easier to take profit early. All right, this sort of forces you to take profit later, which is not a bad thing. Not a bad thing. So options is not a bad idea in the market at the moment. Pound volatility has gone down a lot as well. If you think that the UK is going to recover and that the triggering of Brexit of the Article 50 isn't going to cause too much negativity in the pound, and the world's not going to fall in, and the market will come around to that view at some point, then there's going to be a huge rally in the pound in the next 6 months, all right? When they do trigger it, and nothing bad happens. It's the uncertainty is something also capping the pound at the moment, and it's something probably I underestimated in terms of no one really wants to go gung ho buying the pound until we have a little bit of clarity, either with trade deals set up or a timeline for the Article 50 and the reaction to sentiment in the UK economy or lack thereof. It's hard to gauge what's going to happen, therefore there's so much uncertainty, therefore there's no one taking the risk. And you need that, right? You need that risk taking to get the market moving. So it's much easier to sell the pound because the buyers don't have the same zeal as the sellers. But then again, the market's heavily short. So at some point, the heavily short market has to take profit. And that's really where you make the money, right? When you can pick that turning, that inflection point. The pound had bottomed, and we were getting gangbusters as it broke that previous resistance. We just got a little carried away. We just saw dollar signs. So yeah, I mean, the reason we're talking about that is just there's not much market movement today. We're just talking about the long-term trade ideas and the way we can develop. Let's have a little look at the trade ideas in the room in the last few hours. See if anyone's got anything good to say. This cat's gone long. It's got a morning star on the hour. Okay. This sell-off just here, this candle, is on the back of the Wall Street Journal article saying that the BOJ split on how to proceed. Now, you don't want to hear that. You don't want to hear that as a dollar-yen bull. You don't want to hear that they don't know what they're going to do next. You want to hear that they're about to do something berserk. They're about to do something crazy. So that is... oh, nice. You can just open it up on the new chart. That's pretty real. That if there is lack of BOJ, one sec guys, cohesiveness, if there's this lack of everyone being on the same page, that there's more chance of nothing being done, right? Because the things that we want them to do require unanimous support pretty much. And any sort of dissenters that we get out of that meeting is going to cause the market to question, once again, if the BOJ is fully committed to this line of ultimate quantitative easing and negative interest rates. I think a negative interest rate would end up being good for the dollar yen, though. I mean, the market's so unsure about the BOJ at the moment that if they at least did something, it might be enough. Alright, so this guy wants to buy the Aussie Kiwi. wants to stop just below the lows, and the risk reward is 1. I mean, generally you want a risk reward greater than 1, right? You want a greater than 1, and you want a reason behind it. What are we looking at here? Being making. All right, mate. I mean, I think he's just suckered another trader into it. Join the team, class. Hey, let's all lose money together, mate. We're all losing money together on this trade. Pound yen long, Jesus, we're losing money on this trade too, mate. Jeez. We're going to war with the market. We don't have to go to war with the market. Hopefully the pound yen trade comes off, though, because that would help the euro pound short. And dollar CAD. Yeah, now this is a trade which is getting a lot of talk in the market. Long dollar CAD. Long dollar CAD as the US moves to hike and the CAD remains fragile, the economy. And the potential for Trump destroying the NAFTA trade agreement. I don't know how much really that affects the FX markets, the whole Trump destroying NAFTA. But, I mean, look, if it's a thing, right? And he's pretty much said he is going to do something about it, so... Canadians like, what's going on down there, yay? Hey? First you don't like our pipeline, now you're going to destroy our trade agreement. I can't do a Canadian accent. Sorry, guys. That was terrible. But yeah, so there's a lot of people theorizing that if there's a bond market sell-off, dollar CAD's going higher. If there's NAFTA getting destroyed by Trump or even talking about it, then you have dollar CAD going higher. If you have OPEC disappointing and oil dropping, you've got dollar CAD going higher. And if you've got the Fed being more hawkish than expected, you've got dollar CAD going higher. There's a lot of ways dollar CAD's going higher there. All right, so it's an interesting trade idea. I like it. It's similar to a lot of the commodity currencies right now on the back foot. Timing is going to be key, and whether we break through that previous high is probably key too. But this trade gets a like. I do like it. This chart would look nice if we get back below 85, wouldn't it? Do us a favor, pound. You've been killing us, mate. Do us a favor. See, this is sort of candles, right, which usually happen before the market rolls over. Let's just see how it plays out here. It would really look nice, right? Imagine if this one turns down as well. Won't be going above 85 very quickly again, will it? We have to wait and see, though. It's a fragile sentiment. I did add another extra lot up here, though. Actually, a lot and a half, so I'm pretty keen on it, but I don't really want you guys to follow me into the battle there. Oil, still on the back foot. OPEC is Monday, Tuesday, I believe. So should have an answer by Tuesday. Probably got rumours out on Monday. Whether Iran's going to play ball, whether Russia and Saudi Arabia's got a deal to freeze production. All very unlikely. Now, last time there was disappointment, there was a pretty big sell-off, guys. So let's see if they disappoint again. This would help the dollar CAD trade, though, right? Which we're not in, but we approve of. Alright, let's finish up with a little bit of research. If there's no one wants to look into some particular trade ideas, I'll finish up with a little research. Where are we? Maybe we'll talk about this Goldman Sachs view on what's going on with the BOJ. Yeah, Hakeem. Yeah, man. Look, I think short term dollar CAD's probably got a little bit of downside just because the market will front run the Fed not raising rates. So it's like you get US dollar weakness into the event, then you get US dollar strength after the event. Also, stocks are pretty stable, so that's another reason for CAD to be a little bit stronger. Same reason like the Aussie might rally in the next couple of days is the same reason that the CAD might rally. So you definitely could get out of the trade wherever you're in, as long as you're not in too low. But towards 131, 130.50, you can probably get out in the next 2 days. If we get like a little bounce in stocks on Monday or something. Over the weekend, there's going to be, Jesus Christ. Monday morning, there's going to be so many articles written about the BOJ leaked into the Nikkei. If they say the right things, we probably get dollar yen rallying, a bit of a stock market rally. Then you might even get the CAD to run up on risk appetite like that too. You don't sell dollar yen into the weekend. That's another pro tip. Not unless you expect negative news from the BOJ. You're probably going to get something along the lines of the BOJ is united and we're moving towards a comprehensive package to save Japan. Something along those lines, you know what I mean. Alright, so this is Goldman. They're talking about what they expect for the BOJ. So it's true we have this comprehensive assessment which was ordered by the gov. I think it was ordered by the Prime Minister to sort of give the BOJ more options to get inflation higher. Alright, so they believe the BOJ's comprehensive assessment, which was like the review of policy that the government asked them to do, has four main objectives. To reiterate the positive aspects of easing policy, to switch from the easing policy, quantitative easing, to a negative interest rate policy as its primary policy tool, which would be very dollar yen helpful. Correct the excessive impact on the easing policy on the yield curve. Okay, yeah, there's been some distortions going on there. Curve excessive market expectations of additional easing by extending the policy time frame. Now that may be dollar yen negative, right? And so instead of the market always begging for more QE, they're going to move more to a lower interest rate, which is less directly impacting the supply and demand of the bonds, and try and get the market to do a bit of the work for it. Yeah, so they think that the 2% target is going to be kept, even though they're nowhere near hitting it. Alright, and they think the possibilities of helicopter money and foreign bond purchases by the BOJ is extremely unlikely. Yeah, okay, so that sort of has been taken off the table in the last week. Leaks and talks by Japanese advisors to the government and to the BOJ, ex-ministers and stuff. You're getting a lot of that. We're not thinking about buying foreign bonds. Alright, now this is interesting. Even though they're going to talk about taking interest rates deeper, they expect the BOJ to not do it at the next meeting next week, and to push it to a later week. Then that's going to be dollar yen down. I don't know if they didn't put a little FX update in there, but that's definitely dollar yen negative. Deutsche Bank's talking about the same subject, yeah? Alright, this is a little bit more Asia, rather than specifically talking about BOJ. We've got our friends over at the FX Daily. I don't think we need to look at the text today, guys. We've not seen any substantial change in the market in the last couple of days. The euro literally is sleep. Dollar yen. The pound, biggest sports coming close. So there is some potential next week to be looking long pounds. Dollar Swiss is not doing too much. Aussie US dollar. Alright, so on Monday we got up to 75.70. That's the sort of key level I think that the market might target if we are going to run up into the Fed. And then on the way down we do have that 200-day moving average, which might lead to some bigger substantial sell if we can break it. And the Kiwi. Look how far away its 200-day moving average is. It has room to fall. You know, it's like a little bit of a siren though, right? Every time you get sucked into selling this pair and have all the good reasons, it finds a way to rally. I don't know. We'll see how it develops. I mean, it makes sense to me that it can fall substantially, but it's been stubborn in the past, right? That was the last substantial fall. Size of that was 73 down to 69.50. So that's 350 points. This is only gets us down to about 71. And yeah, dollar CAD, we were looking at that earlier. If we can get above that 132.50, break that 133, then 136 looks pretty clean on the charts anyway. Depending on what the reason is, right? But yeah, it does look pretty punchy here. And the euro yen's just really dollar yen. Alright, just euro pound, shit, sorry. I'm not stopping yet. Euro pound. Yeah, 85.80. I got my stops, my mental stops at 85.90. Oh, was a guy in chat talking about this as a larger, bigger Head and Shoulders on the dailies. Okay. I was talking more about the 4 hours. But yeah. Suppose that would be a freak Head and Shoulders. They're rarely ever just really nice and clean. Head and Shoulders is always tilted a little bit. But what the Head and Shoulders indicate to the market is that the underlying trend is given up. You know, the initial rally, the dip, the extension, the pullback, the next leg failing, then rolling over with a bigger pullback. That's the reason why Head and Shoulders indicate trend reversal so often. Oh, we'll finish up on this little report on the CPI. Potter, you're interested to see if this is going to rattle the markets? ING Bank suggests it might. So the core CPI is coming out with the CPI. Core CPI doesn't include energy. next week we're going to look at the dollar index. We don't look at the dollar index enough, guys. We're going to look at the dollar index. That's a pretty clean way of playing US dollar, right? You're not mucking around with anything. You're just playing US dollar strength or weakness. It's a one pair game. Alright, these guys suggest that they fade any dollar yen move higher ahead of the BOJ disappointment. God. You know what the problem is when everyone thinks the same? That it's much more dangerous to follow that sort of advice. Including any advice I give which sounds too easy. Yeah, I mean, it's just too easy, right? Everyone thinks BOJ is going to disappoint. So they'll be selling. That's what I said, that's what they said, that's what Goldman says. You know, that's what probably a lot of banks are going to say. But perhaps the market doesn't do that just because, you know, everyone's positioned for that, right? It's never really ever that easy. Especially if everyone tries to punt on this particular announcement. Alright. That's probably enough for today. Not enough out there in the market to give us too much to go on. We'll have a little look at the I'll be in the room probably later with CPI numbers. Might be enough to get a US dollar strength if the shakes the bond market, get some further stock market selling. If it comes in as expectation though, you'd probably get a sleepy night. A little bit of US dollar strength right now though. How's that playing on dollar yen? See if that's real or not. You know, straight US dollar strength. Okay. 10 pips. Settle down, Tony. Don't get excited, guys. I wonder if the euro is going to become volatile ever again. How many years are we going to be in the range? Three years before we break out? Alright guys, good luck tonight. I'll be back to Monday at 9 GMT. We'll go more in depth about the BOJ and we'll see what's released over the weekend, any rumors, any movement in the Nikkei on Monday morning, any movement in the dollar yen. And we'll try and develop some trading strategies for the Fed as well, based upon whether they're hawkish or dovish. And just see how this bond market develops as well, right? Now, you remember I'll finish with this. Yesterday, Westpac made good points about whether the bond market can really sell off in a low inflation, low growth world. It is unlikely. You might have to see inflation pick up before the bond market can really sell off. This could be a false start. Alright, have a good weekend. I'll be back Monday.